Live from Museville, Tennessee, this occasional keenly awaited, highly anticipated edition of the Trading Forward with their humble host, Andrew Barbosa and Jeremy Alexander, with another daily dose of mentally delicious brain food and mind you to love life, and trade it. Boys and girls, ladies and gentlemen, legends and legendettes from around the world, how are each and every one of you? Oh my goodness, it's Merchant Monday. It has been busy already today. So many things to talk about. So many discussions to have. It's going to be a good day. So, talk about the DIA. I'm still excited about a buy zone if we do get down to that level. Today's gap is making it seem like we might not make it, but it is we did retest. There is a lot of resistance on the DIA around 180. We're getting a little bit of an upper shadow. This is a very bullish candle though. Bearish candle, bullish candle. Let's find out who wins. So at the moment, I'm still chilling with the buy zone down there. If we get down to that level, still ready to buy. If we do roll over a little bit more tomorrow, something of that nature. And that's kind of my thoughts. If we close above 181, so I know we have a May week 1, or some of you might be in a May week 1 bear call spread. I'm going to wait for us to close above there. I'm going to go ahead and kind of create this. I'm going to pull this over. Give me 1 second. I'm going to make another list because here's really what I want to do. I want a black candle, then a white candle close above our trigger. Otherwise, I will buy the retest, especially if the hourly chart says we need a pullback. We got to think about that plan right there. That's really kind of my thoughts regarding this particular trigger that I've just put in on DIA. So the 181.90. Because if we do close above there, you guys know I am still bullish. I've been expecting a little bit of a breakout of that little triangle phase. I thought that we're going to get a pullback based on Friday's candle. The only thing that I had bearish was this bear call spread. So I'll be keeping a close eye on that. We only have 2 weeks left. So at the moment, this longer term bull put spread, money. Looks beautiful. Still, I mean, I'm quite sure that plays out just fine on the DIA. Nothing really to worry about in general. So here's the SPY. And on the SPY, I think I'm going to have a very, very similar trading plan. So we had a put, I talked about in the real life stock review. I have this as the entry in regards to a potential swing trade or potential longer term entry of what we could consider. If we close above 211.39, the trigger for the protective put will be 206.76 to kind of get back into this breakout of this trend. Because again, at some point we've got to move higher or lower. We could still trade sideways for a little bit, but this consolidation phase really is not going to last much longer. And based on today's candle, it could be happening soon. So really, the only thing that I will consider is if, like, let's say tomorrow we get a breakout, like something like this, then I'm going to wait for a pullback. Meaning I will buy the pullback on the hourly or the 15. I'm not going to take the breakout. If we get a black candle and we rest and then we chill and then we break out, great. Otherwise, there's a very, very strong chance I will be doing the retest. What do you guys think on that as far as a trading plan? Does that kind of echo your sentiments? Do you have any questions on that? Thoughts, concerns, opposing views, guidelines, rules, suggestions, tips, helpful points, pointers, guardrails, guidelines? Are you good? Bex says, I agree. All right, that's cool. There's going to be a lot of bearish traders out there. Don't worry. I mean, they're going to be bearish. But I'm cool with a black candle tomorrow. And I think there's going to be a chance that we get a small black candle. So we're going to see what's going on. Gotcha, Robert. That's very interesting. Very, very interesting. If it was 665 and it closed at 683, okay, that makes sense. So I'll talk to you more about that in the text message. So anyway, so your SPY, that's really kind of my thoughts, ladies and gentlemen. I mean, if we close above there, at least we could do is do a longer term bull put spread or something. Here is the QQQs, and thanks for the update, Arthur. I appreciate it. So the Qs, the low of the day was 105.55. The trigger for the protective put was 105.52. Magic. I like it. Good stuff. I mean, you know, so what's going to happen? Who knows? But will we roll over? Will we not roll over? I don't know. But as of right now, I like today's candle a lot. I'm more bullish than bearish based on today's candle. There's going to be some people who got in bearish yesterday. We did not trigger the protective put trigger. So if you're still in, you have a debit spread that expires in 2 weeks. A 110, probably 106 or 107 debit spread that expires May week 1. We're going to come into some resistance right here. If we do trade up to here and we do break out, retest, and continue, I'm bullish, have been bullish, will be bullish until something changes on the overall market. Any kind of dips are going to be buyable for me. That's kind of my thoughts. I'm bullish. Let's stick with the trend. So here's your IWM. Again, it is a bearish gap. So, you know, keep that in mind, guys. Okay, Friday was a bearish gap with some bearish volume. So this little bit of a retest and a lower low would not shock me. I would still be a buyer if that happens. Why do I sound so weird when I'm saying that? I would still be a buyer. I sound weird. Anyway, that's very good chance that happens tomorrow. If we do continue higher, stellar. I'm good. I'm good with a bullish move. I'm good on all accounts. Guys, today's going to be a very busy Merchant Monday. There's a lot of things to chit-chat about. A lot of things. So let's just kind of hop over and roll. Just so many things to look at. Let's go look at Target first. So let's look at the big guys. So Target, here's my thoughts on Target. I do like the pullback to the 50 exponential, and I like the fact that we're getting a new white soldier candle today. The one thing that I'm not a huge fan on of Target is the strong bullish trend that we've been in, but look how weak it has been. It is bullish, but since 2015, we've only really moved about 10%, which is good. So this little retracement is about, I don't know, $3 on an $8 stock. So it's about a little bit less than 5%. So based on this bullish move, this is a decent retracement, but it's not quite far enough. I mean, ultimately, 84.71 would be a good target on Target. but, however, I do not think that this retracement is large enough. What I mean by that is I think it will do something like this, pull in a little bit farther, and maybe on earnings continue higher. I do like a bounce off the 100 simple moving average. I think the trend was and is nice and healthy, right? Boom, 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 boom. You know, a little bit of a pullback. That's good. A little bit of a bump, a bump. And the pullback's just not quite large enough. And as far as the retracement, we either need to go down a little bit farther or sideways a little bit more. And one of those two things kind of needs to happen. So with earnings and everything going around, coming up, this is kind of my thoughts on Target. I really would prefer it to rest or trade sideways a little bit more before we buy it. Walmart. So Walmart, I went ahead and mentioned that we're going to pretend that I got put the 79 Walmart shares. And the reason I say pretend is because I talked about at length or length. Do you guys say length or length? I say length for sure. Talked about at length, really on the 13th, 14th, and 15th that you could buy back that put sale for about 7 cents. And we were a tad more bearish than bullish. And I mentioned that specifically on the 15th because the, well, it was only 7 cents to buy back on the 15th, and it was 2 days to expiration. So I was like, you know what, we might as well. But again, for all intents and purposes, I'm going to go ahead and play with this a little bit. So we had a bearish entry around 80.07, closed below there. We closed below there on the 15th. And or if you moved it down on the 16th. So we got a little bit of an inside day candle today. I'm going to pull up the weekly chart on Walmart. There's the weekly. So we're at the 100 simple moving average on the weekly chart. So here's exactly what I'm going to do. I'm going to place a trigger because I know 2 or 3 of you did get put to stock on Walmart, which is fine. No big deal. It's a good company to buy. Buy low, sell high. Why wouldn't we? Okay, I'm going to come over here. I'm going to do a little bit of format action. I'm going to change this. Oh, gosh. Oh, what's happening? Protective put. There we go. Protective put. So we had a 22 cent limit. So that is 78 cents. Analysis on 4/20/15. Dollar cost average is now 78.78 as we got put the stock. So now we're going to keep that in mind. We'll come back to the 100. Again, earnings are in May. So I'm going to come over here to the daily. And since we were, they're mid-May, so I wouldn't get into the protective put yet. That's what I'm saying. I would wait for that to trigger. And if that triggers, great. We'll get into the collar over earnings. Awesome. So here is the options chain. And we're going to be down a little bit on the trade. So we're going to come into the May. And I'm going to do a May covered call. 81 or 82. See if there's any premium in there. So there's a lot of premium in the 80. A lot of premium. 82.50, not so much. Let me look at the end of May. See if there's anything in the end of May. End of May, 82.50, 30 cents. I can get behind that. 82.50 is right here. All right, that's what I'm going to do. 82.50. Give me just a few seconds. Covered call. So that way you guys can see how I do this style. And again, this is going to take its sweet time. That's for sure. Covered call May week 5, 30-cent limit. There we are. So we got a trigger for protective put. If it triggers before earnings, great. If it doesn't, and we do something like this, when we come up into earnings, we can buy a protective put weekly. So we'll look at that again before earnings for sure. And so we got a dollar cost average is now 78.78. If we bring in 30 cents, that is now 78.48. And we'll just keep doing that until something happens. Speaking of a stock similar to that, in a similar situation is ExxonMobil. So ExxonMobil, we had, here's the analysis down here. And again, it has earnings coming up. On the 24th of March, we had a $89 covered call for 13 cents. So that is already factored into this dollar cost average. Already factored in. We're going to leave the protective put here. And we can have, well, two choices. Let's come over here back to ExxonMobil. And in fact, we can leave the trigger. But since we're obviously, there's a good chance we won't trigger the actual protective put over earnings, here's what I would do. I'm going to update the analysis to 4/20/15. 4/20/15. All right, give me just a few moments. And I would like to sell. We did an 89 just a few moments ago. We could do a 90 for 47 cents. And then we could buy the 82.50 for 40 cents or 42 cents. So here's the 82.50. So the reason I would buy the 82.50 put is because we have, well, that's where the trigger would be for the protective put, right? And we wouldn't be sad about getting exercised at 90. I think this is an amazing collar. Getting into a collar over earnings. 90 covered call for, how much premium is that again? Let's do 48 cents. 82.50 protective put for 40 cents. Dollar cost average is going to decrease by 8 cents, even though commissions might eat up most of that. It's okay. 84.28. There we go. I'm going to put this down. Give me just a few seconds again. Here we go. I'm going to update this. Bought for earnings. BOUGHT. Bought for earnings. And 90 covered call for April. Format. Template. Covered call. Coordinates. 90. Style. May. There we go. So our dollar cost average is 84.28. So if we got exercise at 90, that would not be that bad of a deal. We'll see what happens, ladies and gentlemen. And so again, if it does gap down strongly, I mean, this is really where you want it to gap on ExxonMobil. If it gaps below there, I'm holding that put for sure. Hold that put, probably buying to close my May covered call and then doing an at the money covered call. 85, more than likely, again, if we gap down to that level. 85 May or June. So if I do get exercise, it's still for a little bit of a profit, and I'm protected overall. Any questions on that, ladies and gentlemen? So this is a great real life example. You like that real life example? Of getting into a collar before earnings and the whole buy low, sell high process. And so again, this is an earnings play where you're protected for free over earnings. You're not paying anything for the protection, which is good. That's what you want. So again, if ExxonMobil gaps down to here, you want protection because it's going to move. If it gaps down to here somewhere, you'll just hold both, hope the covered call expires, and then you'll be able to do a June and a July covered call for free, bring it in premium. You'll get dividends, and then in the August or whenever, September, next earnings again, you do the exact same process. So we'll see. Arthur, thanks for the update. I'll be looking at the day trades in the last 15 minutes. I haven't gotten triggered in on mine yet, so I guess we'll keep waiting. So there's ExxonMobil. We looked at Target, looked at Walmart, RAD, Rite Aid Corporation. So we wanted to close above 910. Didn't happen, obviously. So we're looking for some type of trend. So some higher highs, some higher lows, which it is, and that is what's occurring. So really at this particular location in time, I would say watch for some kind of bounce off the 100 SMA. The 100 SAM. The 100 SMA. And that's what we would look for a swing trade or maybe a potential put sale. But we are making higher highs and higher lows. Right? Here's the higher lows. Higher high, higher high, higher high. So it's in a bullish trend. So if it pulls back down here and bounces, right? Maybe it's just a ascending channel of some kind rather than a healthy horizontal breakout. But you got a little bit of a support resistance right there, about 760 based on this prior resistance. It'll be interesting to see what plays out. Now, we were talking again about Target, and for my ladies out there, there's something called, am I pronouncing that right, ladies? Lilly Pulitzer? Like the Pulitzer Prize? Am I saying that right? Lilly Pulitzer. So there was an article out there. There were some issues on Target on the online retails today, and that's kind of what was going on. Was some of the Lilly products weren't able to be sold or something to that extent, and that's kind of how we got off on a little tangent about dresses for a little bit, and a little bit about online retailers. Peg says, yes, like Pulitzer Prize, she was married to Peter Pulitzer. Oh, okay. Well, there you go. I had no idea. Incredible. I just learned something. Thank you, Peg. So there's a line of nice-end, higher-end women's clothing sold through Target, and some of their online retailers and online transactions are having some issues. Just something to kind of keep in mind, I guess. So as far as Amazon having earnings come up, we're breaking a very, very strong high right here. And today is, in fact, the new white soldier. 417. Expect a small doji on Monday. Nope. That didn't happen. It did gap. I mean, it was an inside day candle for a little bit. But there's a lot of gaps today on some of the tech sectors that were pretty bullish. So here's your hourly. And you guys can see, I mean, it gapped up and it really did trap some people on Amazon. So Amazon as a retailer, we'll obviously look at it more tomorrow. But I'll go ahead and say this, 420.15. Nice new white soldier today. Hourly is very extended. By the bounce intraday. So this is for my day traders. My swing traders, let's just wait for earnings to approach and happen. Because I personally think we're about to hit the 407 target over earnings. I've been waiting for that to happen since the last earnings. So on Amazon, we'll see if we can kind of reach that ultimate resistance, in which case we'll probably get a little bit of selling pressure up there. So we'll see. Peg says, no, Target does not sell Lilly Pulitzer. They all use the same services for online. Gotcha. We looked at another online retailer, which was eBay. Not much was really going on eBay today. Kind of a high wave candle. Earnings is approaching. not really much to talk about. Realistically, this is the only price I want eBay to gap down on earnings. So 52.50. If eBay gaps below 52.50, bearish sentiment. That's really the only way I would play eBay on the bearish gap down. If it gap down too far, to 50 or 46, it could be buyable. If it gaps up, you're probably going to get chopped unless it gaps around above 58.61. If it gaps up above, good job trying to spell that right, Jeremy. If it gaps above 58.61, more bullish sentiment. Okay, there we have it. So eBay. Let's go look at another one. This was CHKP. And I wanted to look at this one as the end of the day for a swing as well. This was Checkpoint Software Technologies. Now, this is not a retail or merchant specifically, but there was a lot of things going on with it this morning. And Peg said she made some R's on this one today. So beautiful job, Peg. I wanted to look at this on the hourly. So here's the hourly. And the reason I want to look at it is because the hourly was a double bottom, and you got a prior white candle. So we're expecting a little bit of a retest. This could be the retest as far as the pennant is concerned on CHKP. So in my opinion, I would say we could just wait for this to move a little bit higher and get in because it is resting kind of the last few hours. So the intraday trigger for a potential swing trade could be 87.14, and then a trigger for a protective put could be 82.37. Now, can we verify earnings on this one, Angie? What is it? Were they this morning or are they coming up? Donna said, have a good evening. See you, Donna. Thank you. Because if earnings is coming up, then we'll create the plan on what we need to look for. Come on, internet.
Come on, computer.
Okay.
CHKP.
Beautiful. So earnings is over on this guy. Open. Very, very nice. So bullish trigger could also, I guess, trigger a bull put spread below the 100 SMA for some time in May. Consider that as well. Something to put on the list maybe. Because if it does trigger, I mean, you got some really good support around that price. So for my put sale fans or, my credit spread fans, 81 really is a pretty decent resistance support. So $80, 77.50 bull put spread. That would be where my stop would be as well for this bullish swing trade on CHKP. So my stop will be if we close below there, after that trigger, something interesting is going on. So I like it. I mean, it looks like it's breaking out. I think that this is the all-time high. Let me go to the monthly chart really quick. Yep, all-time high. Pretty decent wave rotation, boom, boom, boom. You got a black candle last month, black candle, white candle, black candle, white candle. So it can move a little bit higher on the monthly chart. Weekly chart looks decent, a nice, since it gapped on Monday, you have a nice new white soldier on the weekly. And this is really kind of an obviously strong pivot. So if we break below there, something's changing a little bit on Checkpoint Software Technologies. Checkpoint Software. We're going to look at MTG, and this one is for Insane in the Membrane. So apparently we got some earnings coming up on Magic Investment, and we've looked at that 2 or 3 times. So today's gap really isn't based on earnings. So we have a strong resistance that we broke out of on MTG. So I would be bullish. Very, very good gap this morning. I mean, it's perfect. It gapped just phenomenally. The high of that was 10.18. The open of today was 10.20. So just a penny or two above that wick makes it a very, very bullish gap. So here's what I'm looking for on earnings. If we gap up at all on earnings, bullish retest gap. If we gap down below 10, people are likely going to be trapped. Wait for 9:45 buying location. Because I'm still kind of bullish on it based on that gap. He wanted to look at, Zane did, to see the analysis for how you'd have played that. And truth be told, Zane, based on this particular gap and the location, I would have really tried to play it on the 1 minute. Now, here's the 5. So on the 5 minute, which is the average time frame that most people play things, here's your exponential moving average. And so you'd have played it bullish 1038, stop would have been 1033, and near the high of the day would have been about a 1 to 1.5, 1 to 2. You might have taken a little bit of profit off there. I would have imagined taking something off the table since it is the high of the day. Either moved your stop or whatever. Since then, not much has happened, ironically. Now, where it opened, it would have been a little difficult to play on the 1 minute, but it would have been something I would have watched because the gap was just, again, a few black candles right above it. There's your first minute. Look how cute and tiny that is. So you would have been really, really rushing, but it's almost just something like this. As crazy as it sounds, based on that gap, because the gap is just a really, really pretty gap. I mean, you're looking back on MTG on the intraday level. And for my swing traders as well, this is something that you really want to see on a gap, is you want to see a good trend. You want it to see take out a pivot, and oftentimes just barely. And here's the reason why. Here's a little Newsom nugget for you. If you are a bearish trader and you go bearish right here, and let's say you go bearish, the high of the day was 1018. So let's say you go bearish at 1017 and you're making some money. And your stop, you know, is 1020. Just a random number. Just bear with me for a moment. Trade pulls back. You get a short little flag type of pattern. You make another black candle yesterday, and the short traders are thinking, sweet, it's going to go a little bit lower. Well, pre-market, when the stock starts gapping above the place that you entered bearish, but just barely, what do short traders often do? They will often flip their position because now the risk to reward is back to being on their side. Does that make sense, guys? So they can see themselves, okay, I'm getting stopped out right there. I'm risking the exact amount that I wanted to risk. Good for me, but there's a lot of upside potential here. I'm just going to flip my position because the risk reward makes sense for them. So in that situation, that's really when I look for gaps. Those are one of my favorite gaps to look for, is one that traps people. Boop, there's the trap, right? Black candle, so you're obviously trapping people. And then it gaps right above the pivot of the prior few days. Just barely, a few cents. So this is a good swing trade to watch. And since we do have earnings approaching, let's find out what happens on earnings. Really best case scenario is you get some type of inside day candle tomorrow, and then you buy and you set your stop or your protective put somewhere in this gap. That's really kind of best case scenario. That's my thoughts on MTG. Let's go look at cores. And cores, we did look at cores a bit for a day trade today. It didn't trigger. We were keeping an eye on it. Not much was going on. Cores has a earnings date of end of May, according to this. And it really is just continuing bearish. I mean, you're making lower highs and lower highs and lower highs. It is a little bit more of a choppy stock. But here's your support. And it broke some really, really solid support. And a gap today. So on Michael Kors, keeping that in mind, this is a bearish retest gap on the daily. So let's kind of come in here for just a moment. Bearish retest gap on the daily. So we've got that. Let's come over here to the hourly. Look at the hourly. And here's what you're looking for on the hourly, folks. This did trap some people. Prior candle was white. That guy's trapped. Lower wick right there. That guy's trapped. Strong white candle. That guy's trapped. So there's some people being trapped on this. So I would say bearish retest gap on the daily. People are trapped on the hourly. Look for a hourly roll over of some kind. And be more bearish than bullish. That's the best that we got at the moment. I don't have an exact entry, but I guess what hypothetically you would look for is something to this extent where we trade up a little bit and we get some type of evening star reversal right here, and you go bearish about 62.18, you place your stop about 63. And that's really what you're going with. Here's your 15-minute chart, and you guys can see on the 15-minute that pivot that I was talking about did become a factor. So the low of this candle, 61.88. How cool is that? So that was the support. That was the number that I mentioned 5 or 6 times that we'd have to break through for a bearish day trade. We didn't, so let's see if we get some type of rollover. So for my swing traders, Coors is making lower lows and lower highs. Confirmed bearish trend. You had a new black crow yesterday. We've continued. So a little bit of a retest, a rollover, and a continuation. I'd be more bearish than bullish on Michael Kors. Johnson & Johnson. So on J&J, this is a very rare trade for me, but I don't see anything at all. And when I don't see anything at all, I usually do spreads. But on Johnson & Johnson, there's no money in spreads. There's no money in put sales. So this is, I guess, the best case scenario. Long-term iron condor. The iron condor. 105-110 bear call spread. 92.50-90 bull put spread for June. 48-cent limit, which is right at 10% ROI. Since the spread is going to be based off of this margin. Which is not bad for Johnson & Johnson. We have some type of triangle looking thing going on. You know, we got an accumulation. We're sideways. I mean, here's Johnson & Johnson. It is sideways. It's the definition of sideways. This exact time last year, look where we were. That is sideways, ladies and gentlemen. If you ever want to know, if you ever ask yourself, here's another little Newsom nugget. If you're ever asking yourself on a stock, are we going sideways or not? Go back 1 year to the day and find out what price that was. If it's a point or two away from where you are now, you're sideways. So Johnson & Johnson sideways. The long-term moving averages, we are below them. Both of them, in fact. That's why I got the bear call spread up there. You might be able to do a put sale if anyone wants to own shares of your boy, Johnson & Johnson. Holla at your boy. Here's your options. If you're doing just strictly a put sale, let's look at May. So we're going to see. Stan, I agree with you. He said can't place this trade in one because it has $5 and $2.50 spreads. Yes, absolutely. So you probably won't be able to place this one all together. You have to leg into both. If you're looking at a put sale and you want to own shares, May, just regular May expiration, 95 and 92.50, you're not getting a lot of premium. So you could go all the way out to May week 5, the last week of May, and you could consider the 95 put sale, and that would be the best put sale you could do on Johnson & Johnson. 95 is right here. So I'll also write that one down. 95 May week 5 put sale for 40-cent limit. That's if you want to own shares on Johnson & Johnson, you're buying low, selling high. Again, more or less the best that you can do. There you are. We'll see what she does. Or he does. It'll be a guy because his name is Johnson & Johnson. That's just a guess, though. It could be a girl. I don't know. Doesn't matter. I'm getting ridiculous. Both of my Stans are asking the question. Stan J and Stan R. What you guys got for me? I'll pause here for a moment. Any questions, concerns, ladies and gentlemen? That's really, I mean, I don't know what else to do. There's nothing else to do on Johnson & Johnson. It's just really kind of sideways. I do like the bear call. There's a lot of resistance up there. I actually love this condor. I would give this condor a 10 out of 10. Maybe a 9 out of 10 because of how long it is. Maybe. Stan says DAL. Bull put spread for May. Let me go look at Delta Airlines because Delta, speaking of, was another one that I want to get to. I think it might have actually been American Airlines. When's the earnings for Delta Angie. I think earnings, Stan, are right around the corner. So we had the weekly bull put spread expire for a 10% ROI on Delta. It was a great one. It was really, really nice. So we're good to go with this one. That one's done. And just going to verify earnings and see where these are on Delta. Because I want to get the spread obviously before. I think they're approaching stands. Why I'm asking. 7:15. Never mind. It's already happened. Delta. Then I would be looking at a low of this candle is 41. I heavily doubt there's going to be any real money where I want to go. Let's go check it out, though. I want a 41. I don't think there's going to be any premium. May. We might even do May. Let's just try May week 4 first. May week 4, 41.40. It appears you could get almost 10 cents. So if you could get this for 35... And you could, so you sell that one for 35 and you buy that one for 24. That's at least a 10-cent limit. That's what I would go with on Delta. If I was doing any spread at all, it would be that one. 41.40, May week 4. Bull put spread, 10-cent limit. I would only look at this spread if we close below the 200 simple moving average on the daily. I will publish that one. DAL, bull put spread. Nice bounce off of support and the 200 SMA. Also great weekly bull put spread. I think I'm going to link those together. I didn't publish that one? Sure I did. I thought I did. I guess not. Yeah, I won't link it to that. DAL, real life trading. I'm going to put Stan J on that one. There you are, Stan. Bull put spread. And that could be a really fun one if we move a little bit higher, Stan. Obviously, you've already thought about this, but I figured I'd just throw it out there. If we do move a little bit higher on Delta and a lot of the airlines are interchannel, right? They're consolidating, distributing. So if that's the case, and we trade up to 50, hopefully, we trade up to here, and we begin to roll over, you could leg into the bear call spread. And therefore making yourself an iron condor. I dig it. Good little intraday trigger as well if you got a chance to swing trade that bad boy. I like it. Delta looks pretty. Speaking of, American Airlines was another one I think we need to go through the rigmarole, if you will, of getting put. We had an April $49 put sale. We closed $48.19. That's a 42-cent limit. I know there's 3 or 4 traders in this particular trade. And earnings is approaching. So here's what I would do on American Airlines. So we now have 42 cents, so that's 68. No, 58. 58. $48.58 cost average. Okay. Analysis on 4/2015. We got put the stock. Dollar cost average is 48.58 and earnings is approaching. With earnings, I would only concern myself if we gap below the 200, so that's where I would buy. I would buy a 40. I'm gonna buy the 44 put, protective put. Buy the 44. That should, again, it's going to be a big risk. But I'm only really concerned if this is a longer-term trade if we really break below that support. If we don't break below that support, I'm not really concerned. It's in a channel. I'll hold American Airlines and keep doing our thing. So here's the options. And let's do a May expiration and see what we got. Because we don't have to go too far up, but the 44 put won't be that expensive. All right, so 44 cents. we could buy for, and we could sell 52.50 for 90.91. We could also do the 55 if you could get the same order to break even, but I think 52.50, I don't have a problem getting exercise up there, right? I mean, hey, you're going to make a profit if you get exercise at 52.50. Right? Keep that in mind, guys. If you're doing these strategies and you're just buying stock low and selling them high over and over and over, and you're getting put the stock, that's good. You know? 52.50 May for 90 cents. I'm going to format this. Protective put over earnings 44 cents. So that's going to dollar cost us pretty nicely. It doesn't, meaning we're actually going to make money to protect ourselves a little bit over earnings. I don't mind that. Put this on the top. Give me just a few more seconds. Oh, trading view's going a little slow. Here it goes. Nope, that didn't work. Let's try this again. Type in a 1 just to make sure you guys can hear me, since we did have a little bit of audio issues and my internet's being really weird right now. Just want to make sure. Okay, thanks, Arthur. I appreciate it. So there we go. So American Airlines is in the middle. We're in a collar over earnings. We're in no man's land. I think that's great. American Airlines, collar over earnings. We got put the stock. Now let's mitigate risk. I'm neutral, so I'm going to put into this one, American Airline put sale, which I know we published that one. I guess this is one of them. Tags, real life trading, American Airlines. I know Ford Schwartz and a few others are in this trade as well, so I'm going to put Ford in here. There we go. So, yep, there you go, Ford. I was just thinking about you. What's up, Victor? How you doing, brother? Ladies and gentlemen, we got Trading Royalty in the house. Victor Gonzalez and Elantra, both here today. This is a good day. I knew it was going to be a good day. It's so busy, too. It's already 2:43. Wow, we might go a little long. There's a 73% chance we're gonna go a few minutes over. Let me go ahead, hop over really quick, and just make sure to exit any of my. Okay, so I'm gonna exit on INFY. I'm gonna cancel my orders. Where is that? Pending orders. Okay, I'm gonna get rid of that. I'm gonna go here, position, market, confirm order, yes. Market buy. Give me about 3 more seconds. I'm so sorry. Market. All right. Market order. All right. So I'm going to close down my day trading. I did not get triggered into anything in the afternoon at all. So I will exit that. And before we start talking about it, let me just go ahead and see. What do you guys want to talk about for tomorrow in the third hour, guaranteed? Tech Giant Tuesday tomorrow. It's going to be a busy day, is what I'm getting at. It's going to be busy. Baidu, yep. I'm going to look at Baidu to keep our eyes on that condor that we got. Netflix, Google, okay. Facebook, kind of the obvious. Facebook, GDD. Anything else? Boys and girls? Anything else that you want to look at? What's up, Marcia? I can see if I can do that. Zane. Let's put TTO, and then I'll come in here, FEYE, and I'll say Morningstar reversals at support as a general topic. It went off the screen a little bit, but I don't know what that means. Cool, man. I can dig that. You got it, brother. Okay, so those are really the updates on some of the stocks that we've been in. We've got put to stock, all that kind of stuff. Let's go look at 2 or 3 more that were requested, and I want to look at LII has earnings. So, it's the last 15 minutes of the day. Let's go look at a few of the potential earnings. This is a Linux International, which was just a gorgeous retest today. You had some opportunities over here to trade that one as a little bit of a rollover. So my personal opinion on the daily, we have still earnings approaching. So if we gap down to the 100, you could fade that, right? That could be a potential buying opportunity. If it gaps up at this point, I would say if we gap up above, above this pivot will be incredible. If it gaps up nicely, now that we have retested above 114 or above 110.50, good bullish gap. And again, if it gaps between those two tomorrow, between the 100, I'd still play it as a bearish retest. It's going to be a little bit rough, but, it's okay. Larry Neighbors, I wanted to do this one for you, ARIA. I know we have earnings coming up on Ariad Pharmaceuticals, and also know you've been in this trade for a long, long time doing covered calls. So here is your resistance, Larry, and you're at the 100 simple moving average right now. So what I want to do with Larry is I also want to build Larry a covered call, and we'll come over here and talk about a collar because earnings is coming up, and it is a pharmaceutical company after all. So we're going to do a May. And I don't know what your dollar cost average on this one is, Larry, but I know you've been doing covered calls on this one forever. Let's see if we can get a $10 covered call, 30 cents, okay. And a protective put, I guess $8. And we'll do those both for 30 cents. So it would be a break-even trade to mitigate risk. And 8's a good price to have one because of where we are located, right? We're at a place. Covered call May for 30 cents. Coordinates $10. And Larry tells Sue I said hey, by the way. And here's the $8 protective put. Format. Nope. Style. Template. Protective put. Coordinates $8. Protective put over earnings May. Earnings May 30 cents or less. Larry is in shares for a while. I will publish that idea. ARA collar over earnings. ARA at the 100 SMA on the weekly chart and strong resistance. If it rolls over more bearish than bullish. If ARA gaps strongly, Borat voice. Very nice. All right, so I'm neutral over earnings. Don't really know what it's going to do. But I'm going to tag my boy, Larry the Legend Neighbors. Larry in, do this, real life trading, ARIA. Publish idea. Flick of the wrist. And it's out to the world. There we are. What else do I want to look at? I'm going to look at Best Buy and Bed Bath & Beyond also. I know there's a lot of gaps to look at for earnings, but it's going to be a busy day. It's going to be a busy season. I'm excited. Best Buy. So we're looking at Best Buy. Here's my thoughts. I don't know exactly what to do on Best Buy. I really don't. Analysis on 4/20/15. Looks like a head and shoulders. A heart and shoulders? A head and shoulders. I would be more bearish than bullish coming into the, oh my gosh, into the 200 SMA. I think it's the best that I got. Day traders and swing traders have a bearish perspective on Best Buy. If you want to do any put spreads, bear call spreads, you know that's not a bad idea. Let's go see if there's any money in a bear call spread. BBY. Options. May 15th. 40. Nope, no money. Well, a 40 and a 41. You could get for about 12, and you could buy 41 for about 4. It's 8%. It's a little on the low side. What about May week 5? What kind of money's in a May week 5? 40, 43. That's very interesting. A May week 5 for 40, 43, you could get 30 cents, which is a 10% ROI. Earnings are the 28th. Oh, gotcha. Okay, that makes sense. Maybe I could do a May week 4. I'll go back out to May. So May 1, 2, yes, the 29th. That is the day of expiration. Okay, that makes sense. All right, let's try to do a May week 4 then. See if there's any money there. May week 4. So 40, 41. It'd be all about if you could get the spread or not. I'll put this on here. Clone. All right, come up. I like the 40 a lot. I mean, I really do. 40, 41. Bear call spread. May week 4 expiration. 10-cent limit. I would not even look at this spread unless BBY closes above the 100 SMA. Head and shoulders on BBY. Looks like it. Short tags. BBY, real life trading. See what that does. Okay. Let's look at 2 more, and then I'll look at my earnings stuff coming up. I'm going to look at Bed Bath & Beyond and First Solar, since I'm in both of those. I figure I might as well look at them. And a few of you guys are also in First Solar. Ain't no sunshine when she's gone. First Solar, just whatever. That's my verbal feelings for First Solar. Whatevs. But apparently earnings are on the 5th of May. So I don't know exactly what's going on with that, but this is a good potential straddle strangle opportunity. I would imagine that it would be bullish. I haven't got stopped out yet, but I'm definitely protecting on this one. Here's your hourly chart for our swing trade. And the answer is, Johnny, not much is going on at all. So we're still waiting for a breakout, I guess, from the Bollinger Band. So there's the squeeze, and that's really about it. I guess we're going to continue to wait. So on First Solar, bullish swing, yes. Sell to open 65 May week 1. Yes, I'm still on this one. I'm still doing that. I have the calls sold, and they're expiring this week. I'm sorry, May week 1, which I do believe is before earnings. So I'm hoping that plays out. Bed Bath & Beyond. Got a nice little new white soldiers today. It is a decent little retest. So more or less, if we don't roll over tomorrow, I'll get stopped out for probably break even or a very, very small loss on Bed Bath & Beyond. I think my stop right now, I think my stops at this moment are right about here. So we'll see what this one does tomorrow morning. If we gap down and trade to my ultimate target, great. If we don't, stop will be right about there on Bed Bath & Beyond. Okay. Whew. A lot of things to look at. A lot of things done. Let's go look at, just really quick, I want to look at SPY for, I should look at this earlier, but for Zane. He wanted to know how I was trading this as a day trade. So I looked at the daily, and I said, this is obviously a gap and go. The hourly, I was like, all right, so we're retesting, but we're trapping a lot of people. So here's the trap. So I said, wait for just a few moments for the retest. Here's the 5-minute Zane. And I play this very simply. 5-minute, off, near the 10, Morningstar reversal, stop right about there. That was it. 2R on SPY. That was that, man. So I knew it was a gap and go. I knew I was playing it bullish. It was a gap and go in the daily at least. The hourly, it was a retest. So I said, okay, I'm going to wait for a little bit of a retest. It retested to the 10. Saw the Morningstar reversal. Pull the trigger. Now from here, we're just kind of getting a little bit of a selling, some slight selling pressure coming in after the gap fill. So we'll really just kind of keep an eye and see what that's going to go on. All right, what is gapping between today and tomorrow? Under Armour is Under Armour. Really a good gap today on Under Armour. I'm excited about some people getting trapped. Nice gap, confirmed bullish trend. Bullish trend. Therefore, if Under Armour gaps down below, let's put 78. Insanely bearish gap. Insanely bearish gap. How do you spell insanely? Apparently not like that. Is it E-L-E-Y? Okay, E-L-Y. Insanely bearish gap. If we gap up, nice bullish retest gap. Guys, I'm telling you, if we take, I don't think we take out this pivot, but if we do, oh my gosh. Oh my gosh. Because you have a pennant, new white soldier, all-time high, breakout, boom, boom, boom. Some people are going to get in not knowing it's earnings, and if it gaps down, they're trapped. They're crying. They're going to sell. Home run. Will it happen? I have no idea. So there's kind of my thoughts on Under Armour. Let's go look at Verizon. Can you hear me now? Verizon has a little bit of earnings coming out. I don't really love a gap down. I do kind of like a gap up. If we open above 50, nice bullish gap. If we gap down below, what price is this? Meh, 47.27, 47.27, pretty bearish gap. There we go, guys, for Verizon. I think we can see what that does, see if it does anything interesting. What else? Oh, wow, there's a few other things. Lockheed Martin. Lockheed Martin, let's see if it bounces off the 100. Here's the 100. All right, we're there. So as far as the gap, I don't think Lockheed Martin's going to gap that strongly tomorrow. If we gap down below 192, decently bearish trade. If we gap up above, what was that, 205, nice bullish trade. It's the best I got on Lockheed Martin. Harley Davidson. We've made some money on Harley Davidson together. Apparently that's having earnings as well. On Harley, let me look at this thing. What to do? I can see the gap down. Gap up, I don't know. We did a $60 put sale on Harley Davidson. I obviously haven't looked at it since then. It expired worthless. So, good for you guys, anyone who did that one. If we gap down below 58, if we open below 58, strong bearish gap. If we gap up above, really I want to get above that pivot right there, 67, strong bullish gap. All right, market is closed, ladies and gentlemen. So there's kind of my, I guess in a way, earnings viewpoint on what may or may not happen depending on what stuff does. Thanks for writing all these down for me, Pat. Let's look at two more. KSU and UTX. KSU is a popular one. Kansas City Southern. Woo-wee! Kansas City. So that was really the last time we looked at it was here. That was a pretty decently bearish gap too. If we gap up at all, decent bullish retest gap. If we gap down below 100, nice bearish gap. There's Kansas City Southern. UTX. United Technology. Newsom calls for a little longer of a distribution phase. Yes. So I'm assuming that happened back in here. Meaning I wanted to trade sideways a little bit longer, which is what happened. So on this, I don't love a gap down unless it's below 108. Anything else could fade. A gap up above 121 could be decent. I don't love. There we got it on UTX, ladies and gentlemen. That's kind of my thoughts overall. Stan says IBM. Yeah, Stan, thanks for reminding me on IBM. That's going to be a big one. And we already have IBM played out. If IBM opens above 173 on earnings, gonzo. It's going to be a quick retest, though, but I would be bullish above 173. If it gaps down to 152, buying opportunity. And if it gaps down below 150, short sell that beast. Good one, Stan. Thanks for reminding me on that one. Let's see. You guys are chatting about flip phones in the chat pane. I love it. Anything else you guys will look at, ladies and gentlemen? Peg says, I look up instead of down at the phone all day. There's a lot to see in this world. I see people texting each other in a restaurant. Oh, Peg. I could go in a solid 7 to 8 minute tangent about that. And I'm on my phone a lot. I really do make a conceited effort. Conceited? Concerned. Conceited? Concerted. Ah, it's a little mix of the two. Okay.
Concerted.
I make a concerted effort.
Yes, it was.
To not be on my phone, especially if I am with people. Well, obviously, if I'm at a party, a restaurant, I really do my best. Because that's just not. I mean, when I was in the hospital in Atlanta, I saw, I was walking up and down the hallways. I probably walked up and down the hallways 1,563 times. I would always see like the doctors, the nurses, everyone that walked in the hallways were looking down on the phone and just texting. And no one ever looked up when they were walking. It was really kind of strange. I was like, man, we're turning into zombies. I think Einstein actually has a quote. I'm going to try to Google it really quick. And this will be really, I'm done for the day. There's no other trades out there. If you guys want to talk about anything, just let me know. Einstein quote about technology and social. Yes, I like this one. Give me about 9 seconds. I think this is incredible. I fear the day technology will surpass our human interaction. The world will have a generation of idiots. I don't really disagree with you, Mr. Einstein. I don't, unfortunately. Technology is surpassing human interaction for sure, and I do my best. Even when I travel or I do fun things, I don't take as many pictures as one might imagine. I kind of try to take my mental pictures. I think it's a very interesting thing that with technology, where we are these days, and with phones and with social media, it's going to be interesting to see how it plays out. But I will leave that as a segue for tomorrow on Tech Giant Tuesday. Ladies and gentlemen, traders from around the world, thanks so much. Very, very quick, fast-paced day today. Merchant Monday. Success as always. I'll see you guys tomorrow. And until then, remember, love life, live life, and trade it. See ya.